Hello friends, good morning, Vladimir here, and this is the daily video. We are on 3rd of February 2015. Busy night actually. Australia cut the rates and we see what it brings with it. We see this dramatic drop. So the bottom line, Australian dollar is here probably to continue a bit more, and we should be concentrating on possible sell rallies. Even though the drop is not that dramatic, the main pressure remains bearish. And I want to remind you, according to monthly chart and weekly chart combination, that's where we aim right now. Okay, this is the trend line we have. So basically, that's where this pair is aiming. So drop down to 1 hour chart, 4 hour chart, or any intraday you are comfortable to work with, and of course sell in double moves. Anytime you have this double move or kind of a pattern, it could be channel, it could be triangle, and then a break out of this pattern, that what gives us the continuation here, and we should be looking to go for a sell. This trend line protects us, of course, on a following drop, and we should be protecting above it. And we have much more to drop the way it looks and behaves right now. As I said, according to weekly and monthly and even daily, there is more to go. So every small rally should provide us very nice sell opportunity. New Zealand does not really stay behind and just follows the drop from its Pacific body. And the idea here is the same. The pair is still under bearish pressure. Now, personally, I was looking to sell a bit higher here. I expected a break above this resistance to hold, but we can see that the break was without momentum, and right after that we got some kind of a range. That's not a healthy break, that's not a break even. And the idea here now is same, go into sells here with the retraces, and same story, we have this line going here, that should be our protection. Double move should provide sell opportunities. One tricky situation here, that for New Zealand dollar, the way it looks right now, the future is much worse than the Australian. You see the potential drop here? So theoretically, we have a lot of room left. Every rally should be really considered as nice sell opportunity. There is much more to go further. Dollar Canadian is considered as one of the greatest from my point of view. We have a beautiful divergence forming on the extreme right now. Beautiful engulfing yesterday. So basically, we are under bearish pressure right now. Looking on the 1 hour chart, what we could experience right now is 1. We already had 1. We have 2. We might have 3. And last attempt to create 4. Which after that, I think we are going down. But we, on the same time, have to pay attention to this trend line we have going right here. Very likely the pair will try. See that this line? Let's make it like this. Okay, the pair will try to reach it and probably will start a stop around this place, which we will have to see how it behaves and what it does. Now, once again, we might get a stop here and one small rally, which after we will probably go for a sell, of course, with a sell opportunity. We can drop down to lower time frames, 30 minutes or 15 minutes even, and simply put the line that we have right here, break below that, could give us the trigger of continuation back to this line. Okay, or alternatively, as I said, we might get some last rally from here, which will provide us another sell opportunity back to the line. According to the daily chart and it's 20 candles right, we should get going at least to 20 MA, and with very big potential to the opposite Bollinger Band, so a lot to offer here. Dollar yen, also very interesting pair, but it might keep acting tricky a bit. Now, for those of you who did follow the weekly analysis and saw the rallies we had, protect yourself at break even. If not, I think we should be looking to sell another rally, very likely with another kind of bearish hidden divergence or anything like that. Or alternatively, That's the current break above the strong support we have had. So let's see if it managed to hold below it, and if it does and simply reverses from there, that's our alternative sell opportunity. If this area and well, basically this huge trend line we have, which we can we can draw like this, okay, if it managed to hold, that's a really good sign that the pair might continue all the way lower. This would be the next place, 116, but personally I think we should get going closer to 115 or so. I just want to remind you, this is non-farm payrolls week, so basically all related to dollar yen is, well, considered as possible. Okay, so I personally remain bearish, especially while the line I want holds. But first it will be actually here, this resistance. That will be the first stage, the first place I want to make sure how the pair behaves around, and after that we will have to consider. Euro pound is my next pair on the list. Also very interesting one. I think we should get one more rally towards 0.76 up to 0.7670, somewhere in between we will get a stop, and we should start to see bearish reaction. So what I do suggest right now is set this line, let this rally happen, and after that look to go with the break of the line. That would be the conservative way. If there will be no surprises, the euro pound should top somewhere around this place and start its next bearish cycle, its next bearish adventure. For the euro dollar, as I said not once, I want to make sure it makes the break out of the system and gain momentum. The way it looks right now, it's not there, so we better wait with this pair. And the pound dollar, well, this one is extremely tricky. I would only consider to become bullish again if it breaks and holds above the 150.90 or 151 zone. Only then I will consider to back again to bullish side. Alternatively, if it breaks below the last support, there is a big chance that we will get one more drop. That's a big possibility for that, down to 148 or around it, before we set the bottom and start much deeper correction. So let's see where exactly the pair wants to go from here. I would say it's 50-50. It looks like the pressure is bearish, but that's exactly where the trap could be set, and we could suddenly rally from here. So let's make sure. For down it's pretty clear. For up, we need the break above 150.90 or 151 zone. Hold above it, very important, and then we will buy retraces with this momentum. Very important one. Now oil is moving very beautiful, and now it feels like it's ready to make a retrace. So from my point of view, starting from 50 up to 51.50 or so, maybe a bit higher around 52, I believe the pair will start to reverse, probably back to 49 down to 47 again. From there we will probably be dealing with one more push. This time will be much more serious. This is very strong pattern, the way the daily chart forms. From here we need small push, small drop, and boom, then we will probably get this rally forming and happening. So basically that's all for today. Remember, this is non-farm payrolls week, so not necessary risks or big risk really not needed. And keep your mind in this way, because I know it's very tempting, especially when you see some moves like, wow, I want to be in, I want to take part, or like sudden drops of the Pacifics with the news related there. I know how tempting it is, but trust me, from personal experience, nothing worse to take not controllable risk and not measured risks, because whatever looks tempting could turn to be a trap. And why to risk on place where it feels more like a coins wrong than anything technical, right? So wait for your chance, wait for the clear opportunity, tighten your risk, minimize it, and then you can go for a trade with the chances with you. That's the most important thing. So that's all for today. Thank you for watching. I'll see you again tomorrow. Yours, Vladimir.